If they give you more than one thing to do with the same transactions, like in this case, they gave me an income statement, a balance sheet, and note 3. I always start with note 3 because note 3 is going to be transferred to the income statement and the balance sheet. Okay? And like I always do, I always make sure that I write down the skeleton, and then I do adjustment for adjustment in everything. Because I don't want to go and read everything twice, because my time is very limited. Remember, accounting is just as much about working fast and accurate than finishing. Okay, so I'm going to start with note 3. Note 3, if I look at the adjustments, I see 10, 11, and 12 is going to influence 3. So there's only vehicles and equipment. And I see here they talk about vehicles depreciation and equipment being bought. So nothing vehicles happened. So it just stays the same. The cost is 252, the beginning of the year and the end of the year. The accumulated is 65.4, which gives me a carry value of, can't be 8 because there is a 200, so it must be 186. Thank you. Okay, there's no addition, there's no carry value, so there's only depreciation. Yes, there's no oh, I didn't even see it. There is land and buildings.
Yesterday I asked you if we should open land and buildings.
Why must I? Oh, didn't they ask it?
Land and buildings. No, like yesterday I asked you whether we should open for
Okay.
land and buildings because they didn't.
Sorry, baby. Land and buildings. I didn't see land and buildings. Okay. Can we all just calm down? It's not a train smash. Nothing happened to land and buildings. Am I right? So the carry value and the cost is going to be exactly the same beginning of the year and end of the year. Okay, if land and buildings is there, then you open it. Okay, here we go. So now we have to depreciate vehicles. They say vehicles is 20% on cost. So I just take the cost price times 20%, and that gives me
is 50,400.
okay, 50,400. Who wanted to ask a question? Okay. So I say 186 less 50 gives me 136,200 less 252 gives me
115, yeah.
okay, or I can say 65 plus 40. Right. Okay, equipment. So equipment, they tell me I bought a computer of 15. Right. So if I draw my T for equipment, I have an opening, a purchase, and a closing. And by the way, you can see it here. I've got an opening, a purchase, and a closing. Can you see it's your T account? Now, they say I purchased 15,000. Now it's very important for me to read, was this recorded or was this not recorded? If they do not tell you, you assume it was recorded, right? Because we hope that our bookkeeper does his job. And what is his job? To record. Okay, so in other words, if it was not recorded, can you see the only thing in my equipment T would be the balance in the trial balance if it wasn't recorded, right? I'll be with you now. If it wasn't recorded, So in other words, it would be this balance, a trial balance amount would be here if it was not recorded. Okay. If it was recorded, can you see that the amount in the trial balance would be the closing? So it would be that amount if it was recorded. Okay. So now let's read. What do they say? They say it was recorded. Meaning, this amount they give me here, 156, is the closing. It's after I bought the 15. So now I'm going to reverse. And if I reverse, it's 156 less 15 gives me 141. If you look now, let me try it this way. If I look at that 156 in the trial balance, they tell me that 15,000 was recorded, meaning the 15,000 is part of that 156. Meaning this is after I bought it. Right? So what was my amount before I bought it? The 141. So in other words, if in the trial balance there was a 141, they would have said the 15,000 was not recorded.
Whenever they said that something was recorded and they give you the amount and how that money is part of it.
Yes.
So basically, like, in order to get the first prize for the first one, you have to take the 156 and subtract the.
That's it. You work backwards. Is everybody shocked now?
Yes.
Okay. Now I know the accumulated is always the opening, unless they tell you something else. Because depreciation is an adjustment that's calculated the last day only. Okay. So 141 less 24 gives me
116400.
Okay. Now I need to depreciate. So depreciation, I now have a new and a old. The new one is the 15,000. They say it's 15%. I bought it on the 1st of April. My year ends 30 June.
So it's 3 months.
So I have April, May, June, 3 months. And that gives me? Anybody? 560. Okay, round it off. Next. Now, I want to do the old one.
Oh, the old one.
But now the old one, I want to go look at the method. It's not the cost price, it's the diminishing balance, meaning I use the smaller amount. Diminish is small. They say that here. Okay. So, 116,400. 15% gives me?
17460.
And if I total,
This is the old one.
okay, is everybody sure?
Yes.
Okay, now I get the carry value. 116 plus 15 less 18 gives me? So what did you? So you want to do accumulated first by saying these two added, and it gives me.
426.
And then you say 156 less 42 gives you. 3377. Okay, I'm not going to do all the totals because I want to get through the exercise. You're going to do your totals yourself. The only two totals that's important for me is the depreciation, because that depreciation is going to go to my income statement. Okay? It's going to go to my income statement here with expenses, depreciation, 68423. And please guys, again I say, please do your calculations where I can see it. I do not see your question paper. I only see your answer book. Okay? I'm also going to total my carry value, which will give me what? Okay?
Don't forget the
land and buildings. No.
Plus 1,
588,577.
Thank you. And that 588577 will go here to tangible assets.
I
Ne?
missed the 3.
I hear you. I will answer you now. Okay. Okay, so let's go on. First adjustment. They say part of the premises was let to a tenant. So now I know I am talking rent income. Now, I always want you to know that here in the nominal section, that rent that they give me here is my money. This is the cash I got. Okay? Now, if you look at this, this is my rent income. I've got the money. The money, they say, is for 8 months. You understand that? Because they say she paid in full for 8 months. So the money is 8 months. How much is my income according to my financial year? In other words, how many months did she rent from me? 6 months. Because they say she started renting 1st January and my year ends 30 June. January, February, March, April, May, June. So I'm supposed to receive 6 months. Can you see? I have to subtract 2 months. Okay. In other words, if I look at this, 62,000, how many months does that represent? 8. It's the amount of months I received. So if I say 62,000 divided 8, I'm going to get 7,750. This is how much I receive per month. Because I divide by 8 because that's how much I received. They tell me she paid for full 8 months. Now, how many months did she pay too much? 2 months. So, this is 8 months. I want to take out 2 months, which is the 15,500, which will give me the 6 months, which is my income for this year. And how much is that? 4? And if you say 46,500 and you divide it by 6, you'll also get 7,750. And now I know that is an income received in advance, and I know that's a payable. And that does not sound logic, because how can income be a payable? But I need to pay them back, ne? Because they overpaid me. Okay. So, is there any questions before I move on? So the whole thing here is about, we received 8 months, but now I need to only fit in the months for this year. And for this year, it's only 6 months. The other 2 months is for next year. So I will show the other 2 months in next year's
So the amount that goes in the
income statement is the 6 months. It's the real income for this financial year. Is everybody sharp? Okay, next one. Now they say 40,000. Can you see there's 2 sentences? So let's first do the first sentence. 40,000 of the fixed deposit matures in 6 months. Can you see it's less than 12? Ne? So it means I want to take it out of current and I want to put it into current. Why? Because it's no longer a long term, it's now a short term. Is it cash yet? No, I have not received it yet. I'm going to receive it in 6 months. So is it part of my bank? No. So why am I saying that to you? I'm saying that to you that because if bank was an overdraft, that 41.5 would go here in bank overdraft, but that 40 will still go to cash and cash equivalents. It doesn't make your bank overdraft less because you have not received it yet. You are going to receive it.
Then why is it not in
And that's why we call it a cash equivalent. Okay. I know it's weird, ne? You would think to put it in receivables, but no. It's a cash equivalent because it's already in a bank account of yours. Now don't worry. Okay, so now the next part, they say bring the outstanding interest into account. So now we are talking interest income. Am I right? So now I am worried about this. So they say here, so let's just first see how much is outstanding. So let's quickly look. What is my money at this stage? How much have I already received for interest on fixed deposit? Now you forget about the 40,000. The 40,000 isn't applicable for this financial year. Ne? Now go back to your fixed deposit. Where will I see how much interest I already got? Interest on fixed deposit. Now if you go to interest on fixed deposit, you'll see you already got 1910. That's the cash in the bank already. Okay. But how much is my real income for this year concerning this financial year? Let's look. How did you get that? That's it. You go look at your fixed deposit. Can you see there they say 8%? That 8% is my interest rate for this year. Right? So in other words, that 86,200, ne? That 86,200, I'm supposed to earn 8% interest. And that 8% interest is what? 6896. What? Can you see that is my interest income? 6896. That's my income. But I've only received 1910. Can you see the difference? They still owe me, ne? How much do they owe me? 49. You see? They still owe me. Now, can you see you want to show your income? What you're supposed to get, what your fixed deposit earned you. Right. Now I ask you this. Now I ask you this. That 4986 has to now go to your balance sheet. Where will it go to your balance sheet?
Cash. Doesn't it go to cash?
Now, can I tell you? You're going to look at this. Interest is paid directly into the business bank account. That sentence means that I don't reinvest it. I don't capitalize it. No? Remember, you got the two options with your fixed deposit. You can either take the interest and live from it, or you can take the interest and put it back into the fixed deposit, making it part of the original fixed deposit, meaning capitalizing it or reinvesting it. If I reinvest it, I will add it to the original fixed deposit. If I take the interest for myself to spend, the part they still need to pay me is going to be a accrued income. Now, which one is this one? Am I going to add it to receivables, or am I going to add it to fixed deposit? Receivables, because they say that they usually pay it straight into my bank. Okay. Do you get the difference? Can you see? Capitalizing or not capitalizing has no interest in the interest income. It's only the balance sheet. Yes, that's the only difference. Yes. That's what I'm actually saying to you. Is capitalized or not capitalized? The interest is the interest. Yeah. The only difference with those two words is where I show it in the balance sheet. Capitalized go with the fixed deposit, not capitalized goes with receivables. And only the part that is not in the trial balance yet, because the part that's in the trial balance I already received. That's why it's in the trial balance. Or I already calculated. That's why it's in the trial balance. Okay. Yes.
So that is like
okay. So the next one, they say 500 rand still payable on our telephone. Okay. So that means my expense that I see for telephone here is still outstanding with 500. I have not paid it yet, so it's a payable, so it's an accrued expense. So I add it to payables. You hear the word, it says pay the bill. Payable, pay the bill. I still need to pay the bill. Yeah. So everybody sharp with that? Yes. I'm going to skip 4. I want to go on to, I want to skip, can I just, okay. I'm going to explain 4. Okay? It's really not difficult. I just need you to hear this. So if I look at my trading stock, my trading stock has got a balance here, where is it? Of 146,700. Everybody happy? Now they say, and please listen to what I'm saying to you. Trading stock to the value of 6,000 was stolen. Okay. So, in my income statement, I am going to write loss, stock stolen. And what's my loss? 6,000. You agree with me? And I'm going to ask you to subtract it from my stock in my trial balance. Because do I still have it? No. So there's 6,000 rand stock stolen. You guys get me? Now, what do they say? The insurance will pay out 85% of the stock value. Okay? So what is 85%?
100.
What is 85%?
5,100.
Can you see they will pay it to me? So, can you see it's going to be a receivable? Ne? It's a receivable. Now let's go back to the loss. Is the full 6,000 a loss? No, because I'm getting back 5,100. So only 900 is a loss. Can you see what you else could have done? You could have said the 6,000 times 15% is a loss. Ne? Because 85% I'm going to get back. Is everybody sharp? Now, if I look at the next note, they say trading stock on hand 139. Do I still need to subtract that 6,000? No, because it's stolen. So if I go in there, am I going to see it? No, it's not there. You see? So I know in my balance sheet, my stock is 139. You get me? And I know now my closing balance is 139. Okay? Now, if I add those two, can you see it gives me 145? Can you see I've got a deficit? Ne? So, why isn't the 6,000 part of the deficit? It's stolen. I'm claiming it from the insurance. I know that it's not there. Remember, with this calculation, it's the things that I don't know about. Stuff that broke, or stuff that was taken by the owner and he never told us, or debtor bought stuff and we didn't record it. Okay, it's not stuff I can claim back from insurance. So, what's my deficit then?
1,000.
Can you see? I'm shorting 1,700. So, in my income statement, my trading stock deficit is 1,700. I get that through the stock less the stock that was stolen, less the stock I counted, and I see, oh, I am short 1,700.
Ma'am, if you did the table, would you still have to do the calculation?
If I can see the table, yes. But where did I do my table? On my question paper. Can the person marking see this? No. So that's why I wrote it there. If I did the table here, then I didn't have to do that.
Okay.
It's just very important that the person marking can see it, and she can't see the question paper. Even if your name is on it and you stapled it there, it's as if it doesn't exist in my books. Let me just say this again. If I look at this entry, my stock is supposed to be counted 140,700. Ne? But we only count 139. So the 17 is missing. Okay, and I'm just going to investigate. It doesn't have to be a train smash. It's most probably the owner that took stock and never told the bookkeeper. Okay. So the next one says, stationery includes an amount of 300 for paper that will only be used in the next year.
Oh, so then
Can you see it's your stock count? So that 300 I will include in my balance sheet as stock. ne? Because I didn't use it. And in my income statement, I'm going to say, oh, I didn't use it, meaning I only used 560. You guys with me?
Then you go to your inventory.
That was an easy one.
So,
All focus. So, next one, they talk about, according to the loan statement, the total interest payable for the year amounts to 20,000. How easy. They gave you the interest. Where is my things? Here, they told you. It's 20,000. Right? Then they say, the interest must be capitalized and 10,000 paid back. Now, can you see? It must be capitalized, which means I still need to add it to the loan. So if I go to the loan, if I go to the loan, I still need to add the 20, because that 190 that they gave me here is what? It's the opening less the bank. So plus the interest gives me the closing. And 10,000 is paid back next year. So that 10,000 is going to become my short-term loan.
okay.
So this is then 200,000 and I block on top.
There's a question for you, ma'am.
The only thing that is left, and I want to do this. So there's two left. They say the advertising expense is for a contract valid for 3 months ending 31st July. Now when does my year end?
The 30th.
30 June. So can you see 1 month is prepaid? So I need to subtract it. I need to subtract the 1 month. They tell me this is 3 months. 1 month is prepaid. So I want to show 2 months. Okay? Everybody with me? So 44,5, 20 divided 3 gives me 14. And that gives me
29680.
okay. And that 14,840 is a prepaid, meaning it's a receivable, Just make sure I know my lines. Prepaid expense is a receivable because I still need to receive a month's advertising. I overpaid.
When someone else overpays you, you pay them back.
That's it. Then it's a liability.
Payable, yes.
I owe them a service.
Yeah, by how much, ma'am?
14,840. I just want to quickly, before we close off, if I look at number 9, this is a transferal. Guys, can I please tell you this? This is going to influence your receivables and your payables. This, a creditor with a debit balance transfer. Now what I want you to remember is either a plus plus or a minus minus. The signs doesn't mix. Okay. You always go, you draw a T. So debtors is plus minus, creditors is minus plus. They say it's a creditor with a minus balance.
So it's a minus minus.
So what am I going to do to transfer?
Minus.
Plus plus. Go listen to the video because the bell rang. So here it's going to be a plus 480 and here it's going to be a plus 480. Can you see the signs are the same?
It's time to go write economics.